What's good, all premium members? I've got SPX500 today. I'm going to be teaching you a strategy on SPX500. I already posted a YouTube video of this, live trading it. I'll be doing live trades for the Discord only, so make sure you join. It's not going to be every day, because some days I've got stuff to do, but like a lot of the days we will actually live stream trading live SPX, so you can learn the strategy A to Z, final, okay? So yeah, without further ado, let's get straight into this. So yesterday was the position which we took. It's pretty nice. Today maybe also a position, and the time in which we entered this trade at is actually at 2:30 UK time. I completely forgot, my bad. Yeah, so 2:30 UK time till 4 o'clock, so 1.5 hours trading. New York time, I actually don't know what it is. That I promise you, haven't checked it, because of course when I was learning about ICT, I just switched the times myself. But yeah, I'm pretty sure this is a ICT kill zone anyway. And yeah, without further ado, let's get straight into this. So let me just draw a diagram of what we basically have to see. Okay, so let's just say that this is 2:30. Okay, this is 2:30 opening time, and we get some. So we check the 50-minute time frame only. Don't check the 5-minute time frame. 15-minute and the 1 minute for the execution. Right, that's it. We literally look for a pattern like this. So let's say 2:30 opens. We get this high like this, right? Let me actually draw this better. This isn't the best drawing. So we get like something like this. Boom. That 2:30 opens right here, okay? So now we need to identify liquidity zones. This doesn't really have to be proper liquidity, like equal highs, equal lows. It'll be better if it does, but it can literally just be highs and lows. So just mark out the 15-minute highs and lows. We're on the 5-minute right now, but do it on the 15-minute, okay? So we mark out this high right here, this low right here, and this low right here. This new low, we haven't got enough data on it, but let's just say this is a candle, and we get a new candle form right here, and the third candle forms, then we can mark this as a low, okay? So yeah, if you start moving like this, and then we can mark this one as a low, okay? And now we just wait for price to take a high or a low, and then what price does is it runs this high right here, okay? Then boom, we just leave our alert right here. We don't trade it at all, okay? We just leave it here. And now we go on the 1-minute time frame. So the 1-minute time frame is where we start looking for execution. So let's just pretend that we zoomed in into the 1-minute time frame right here. So we basically took out the liquidity on the 1M, right? And what happened is we form maybe like a low like this, and we start coming back. As soon as we break this low with a body of a candle, you start looking for your entry, okay? So there, a body just broke the low. Let's just say a body broke the low. Then we can literally look for a retracement back, or we can just enter right here. And the high we can cover is this one or this one. I like covering the high, if my stop loss isn't like too big. But this high should be also nice. If I have a nice RR, you know, so you can check where we're targeting. If it's a 1 to 2, that's absolutely perfect. You can cover this high. But if it's like a 1 to 1.5, I'll just cover this high, right? So mine's based on risk to rewards. I mean, yeah, you shouldn't really do it. If it's a 1 to 1.5 risk to reward, take it. But for me, I just like being more risky. I don't really see it running a high anyway. I really don't. Okay. So yeah, as soon as it does this, we can look for like a retracement into here, or we can literally just enter right here. But again, retracements are better because you're going to have a better risk to reward. But that's only if we get a retracement. Usually we don't even get a retracement, it just runs away, okay? So retracement right here, and then we enter our trades, boom. And where we target is a previous low, so somewhere like this, right? Or this one, actually, because this is where we got the low. Or again, this one, because this is a new 15-minute low, right? So yeah, we just target there, 1 to 2. I take out 50% of my position at the first TP, because this strategy, yo, if it runs, I mean it, okay? I promise you, I mean it. It runs, okay? Like, I could show you clear proof of this. I backtest this strategy a lot, just to tweak it and stuff like that. So let's go back in price. I'm pretty sure the last time I backtested, not the last time, but like the last backtested was right here. And as you could see, took out this liquidity high. Of course, there's going to be some losses. You can't really fix that. But again, we're trading from 2:30 all the way to 4. Okay. So you can look for trades from here to here. If we enter a trade from to 4 o'clock, we can actually hold it, okay? But yeah, just stop trading the strategy at 4. That's what I'm trying to say. And this entry took place at 5:45, so it's okay. This one right here, beautiful entry, liquidity, and look, once it starts running, it starts running. So make sure you take out 50% first TP. It's the best thing you can actually do, and move your stop loss to break even, okay? Of course, the price might touch a break even. It might do you dirty. It might touch break even, and then it might, yeah, like fly away. But it is what it is, you know. Every strategy, this sort of thing happens. Like it might touch your break even, and then it might start running away. Okay. So yeah, let's just mark out the 15-minute highs and 15-minute lows before 2:30. Let me also replay price. So right here. So yeah. So I marked out this high. This is only temporarily. Why? It's because It's because I was looking for one more candle to separate these two, so it can look like a real high. There you go. Now it looks like a real high, right? Because if I just have this, you don't know if price is just gonna come up and just break the high. Okay, so I'd wait for it to be separated. There you go. As you can see, let me also make this faded, so you guys can see it properly. There you go. That's so much better. So yeah, I marked up this high right here. Let me also make this black for you guys. A low. This is also nice low. Then we mark out this low right here. Boom. This is the only strategy you actually need, okay? If you only want to trade 1.5 hours a day, I promise you this is the only strategy you need. Day after day, it performs well, okay? You are going to get losses, okay? Maybe 2 losses in a row, 3 losses in a row, but over time, the losses are going to be way more than the wins. I've backtested this myself. It's a 60% win rate with a 1 to 3 RR. Which it targets, of course, after you take your partials at 50% most of the times. Okay, so you can target 1 to 3, but yeah, now we just wait. Okay, I'm not going to mark this low yet. Why? It's because we haven't got 2 candles after it, right? But look what happened. Okay, so now we took a high. Okay, as soon as we took the high, you can check my YouTube channel, or you can check the live trade section. I posted it there too, the YouTube video, and you could see how I performed while I was in this trade. So yeah, we took this high right here. Massive selling pressure. It doesn't really tell me a lot, selling pressure and buying pressure, but we could still, you know, check the markets out for it. After you got the selling pressure, now I'm like, okay, and we took out the liquidity. I'm like, okay, now I'm just waiting for a low to form. Okay, but no, we never really formed a low. What we did is we just took out this low, but the body did not take it out. We just wait for the body to take it out, then we start performing the entry. Okay, the body just broke this structure right here. Now what I do is I wait for price to just retrace, and that's it. Okay, because usually, let me tell you something, when the body breaks the structure, it means that there's loads of selling pressure towards the downside. Okay, sellers are coming into the market. You know, the market was meant to be made like this. You know, after we get a bearish engulfing candle, also look, as soon as we get bullish engulfing candles of like the black candles right here, we usually switch trend. Look, bullish engulfing, bullish engulfing, bullish, bearish engulfing, you're bearish. Okay, so as soon as you got this bearish engulfing, also that can be like a sign to you that, yeah, I'm gonna be more confident when I'm inside my trade. Okay, and yeah, this usually always happens. Look, so you had a bullish engulfing right here. It only has to engulf the body, not the wick, and then after that, price went up. Okay, so yeah, this bullish engulfing, this bearish engulfing can also tell you a lot. Okay, and then as soon as you have a break of this low with a body, then I'll set my entry limit, or if you're not going to enter limits like I did, I just entered an execution. I waited for price to come a little bit higher. Usually it's not going to tap straight back into here, so what I did is I just went for 50% of this zone right here, and where I covered was this high. Okay, again, I told you it all depends on your risk to reward. So I was targeting here for the first TP, which is 1 to 5.2. It was actually bigger than this because I got my entry like somewhere like this or whatever. But if I had my stop loss right here, it would have been negative RR, which is never a good thing to do. It's never really a good thing to do, you know. So yeah, now just wait for the entry. What you can do to get your entry also is you can take 50% of this zone, and then you can literally just enter your trade of 50%. I've seen this become very, very, very extremely well put, you know. But yeah, start looking for, if you saw the live trade, please go on the live trade. I'll post more live trades. You can see me doing it live in action. It's pretty hard to explain right here where you're going to enter your trades at, but it's super easy. Just look for the break of structure of a low with the body, or if a new low forms. I like it when a new low forms actually. Okay, so when something like this happens, and then we form a new low. After price breaks this low with a body, then I get into my trade, boom, and then price starts dropping, okay? Of course, sometimes again, it is going to touch a stop loss. Even ICT has said that, yeah, of course it is. Don't beat yourself up for it. Long run, it's going to get more wins. I've tested the strategy myself. You can test it yourself too. Back test it, you'll be absolutely surprised, okay? So now we just wait, boom. I was looking for selling pressure to come in the market, so I waited for this candle to form, and then price went up, and then as soon as price started going down, then I entered my trade, and I got my entry somewhere right here. Right, and then there you go, entry, boom, like so. TP1 smashed in about 2 minutes, basically 1 minute, and then TP2 I was targeting this low, 1 to 2.5, which is absolutely amazing. But then what happened is price absolutely tanked, and then I just took my take profit right here. Because my take profits, I don't really have a limit on them. I literally just market execute them, and boom, because yeah, and then 50% was closed right here. And then 100% was closed right here. Because after you get a massive candle like this, usually we start retracing, okay? Pretty sure news caused this, or like some sort of thing did actually cause massive selling pressure to come. But it's SPX, you know, it's a crazy pair to trade. But yeah, as you can see, touch stop loss, and then it started going back down. Yeah, take profit 2 right here. Usually my take profit 2 is also like my full TP. But again, if it does start running like this, you can expect it to like tank, okay? But I saw rejection starting to pop up in the market right here, so I closed right there. But yeah, let me go through more examples of this. I don't want to just go through one. Let me go through the previous day. I'm pretty sure there was an entry on the previous day. Right here. So when do we start entering the trade? 2:30 UK time. Start looking for the opportunity, right? 2:30 UK time, boom, right here. Then we just mark out the highs and lows. You saw this high right here because it's separated by this candle, boom. We see this low right here, boom. Let's just leave that for now. And yeah, we see this low right here, of course. But yeah, and then we just wait for a high to be taken. Okay, so this high was taken right there, boom. The high was taken. After the liquidity was taken, we formed a low right here. However, we never broke the low with the body. Look, price came back and we never broke the low with the body. So I just completely dismissed that entry right here. Yeah, so I completely just dismissed that entry right there. And also price never broke this low with the body, okay? So yeah, we just completely dismiss this entire section right here. But the entry is still valid, okay? The entry is still valid. Let's go on previous data and see if we saw another high. Maybe we probably did. No, we didn't. Yeah, we did see this high right here. But that already got taken out by this, okay? So yeah, this entry, we just completely dismiss it. And then we could still look for our entry, okay? You could still look for it. Just stop looking for it, because SPX, what it moves like is it moves in like a trend-based system. So once it starts moving up, it starts moving up, okay? It doesn't just do this, cause a downtrend and then go up, okay? Usually it actually does fire away, okay? So yeah, now we wait for a break of a low, okay? Right here, boom, in this region of the market. And then we actually broke this low with a body. As soon as we broke the low with the body, you can start looking for price to go a little bit up, maybe to the same section where it broke, or you can literally just enter your trade off right here. Doesn't really change, doesn't really make a difference. And then right there is my TP. Because my TP is right here, my take profit is all the way over here, I'm pretty sure. Boom, it didn't end up actually touching, but yeah. And then price is also at break even. So yeah, my TP is also right here. Price touch break even, it's all right. The way I would move to break even also is, again, you can literally just target right here. This is absolutely perfectly fine, okay? The reason why I would move it to break even also is because we broke significant lows. You don't want to just lose all of this profit and not move it to break even. This is 2.35 RR. Price ended up running 2.2 RR. You don't want to lose all this profit and price just taking you out at a loss. That's just some discrimination, you know? That's not what you should really do in the market. But yeah, this one did actually end up touching break even, which I'm fine about. I really don't worry about that sort of thing, you know. But yeah, it ended up running 2.2 RR. Maybe if you also targeted this imbalance right here, would have been perfect, because 1 to 2.05 is really good, you know. But yeah, that's just what happened in the markets this day, you know. Entry, boom, right here, and that's just what took place. So now let me show you another example. I'm pretty sure the day before this also was a trade. 230. Yeah, right here. Okay. So now 230 time start taking trades right here. Okay. And then what we mark out is we mark out highs and lows. So for example, this is a low which I'd mark out. Why? It's because it's separated by all these candles right here, and this is the 230 low. And we start trading it all the way until 4 o'clock. We stop strictly at 4 o'clock. Just completely stop trading at 4 o'clock. It's such a small time, but we do form a lot of trades through then. I'd mark out this high, and yeah, that's really it. I'd mark out this low and high, and if we were trading throughout this time, maybe this low also. But yeah, let's just start looking for the entry. So when we break the high right here, we broke it once right here, but we never ended up breaking a low with the body. And then we formed a new low right here. Boom, price went down, broke the low with the body right there. And then we saw multiple more down candles. Entry right here. It's very, very, very high entry. But again, I'll just cover the high right there. Or you can cover this high right here, or you can cover this high right here. It all depends on you. It all depends on the RR you're getting. So if you cover that high right here, RR 1 to 1.7. That's good. Stop complaining. Okay, it's still good. You're gonna get this in and out, day in, day out in the markets. Of course, you're gonna get losses. Stop telling me, oh yeah, I just keep on getting losses and losses. Okay. And you might still be questioning, well, where would I get my entry at? Because of course we broke this low. I'm afraid. Yeah, I did get afraid at the start. Like I was like, okay, I'm gonna get conservative. I'm gonna enter my trade 50% right here. But ICT also said just enter off the FVG, just enter off the imbalance. If it retraces, it retraces. That's why your stop loss is gonna protect you. Okay. If you cover this high, you would have got a way better RR. But as I did say, like 1 to 1.5 is not the best, but 1 to 2 is good. This is basically 1 to 1.5, which again can be a little bit bad, but you can just cover that high right here. Okay, it all depends on you, how much of a risky trader you are. I would personally cover this high right here. I wouldn't cover this high 1 to 1.7. It's just not too pleasing for me to see. But this high right here is absolutely perfect. And look, so your entry is just going to be on this FVG. Okay, once we started projecting this FVG and we got the selling pressure introduced in the market, we may have entered a little bit late right here, but there, that's just how it goes. Okay, and then price ended up tanking. You may have held this until right here, because of course we had many down candles. So after it touched our TP1, I manually closed fast TP. We had this massive down candle. So most likely what I've done is closed right here. Okay, and then when it started rejecting off this zone, I would have just closed. Okay, boom. And then 4 o'clock we started reversing. So 4 o'clock you can completely close your trade. And price started going up. Okay, it all depends on you. Tweak this strategy to your own benefit. Okay, tweak the strategy to your own benefit. Whichever way you like trading it, treat it that way. Okay, again, once you start touching back in the FVG, we enter in our trade, or when you start seeing the rejections, or when we like are happy about entering the trade. Okay, the more riskier the trader you are, the more higher RL, lower RL you're gonna get. Of course, sorry, the higher RL you're gonna get. So for example, this trade right here. No, sorry, this trade right here ended up being a really fast RR for me. But the entry point might also confuse you. But again, literally, we started with retracing. I entered my trade right here. Because again, as soon as we get a break of a low with the body, we usually have a massive move in that side of the market. And we had a break of a low with the body right here. And then we started having a massive move in that side of the market. That's it. Day in, day out. You can check it yourself. Backtest it. Kind of specialize it in your own way in order to increase your win rate. But with this, I'm perfectly fine with it. I taught you an entire strategy, which I use. Premium strategy, which not much people actually talk about in the ICT space. I actually haven't heard, like, I've only heard me and someone else trade it. Okay, so yeah, everyone, like the video. Sorry, don't even like it. It's a premium video, and take care.